So
I,
yeah.
I'll record.
Sure.
The recording should start in about 3-5 seconds.
Okay.
All right, guys. We're not live, but we're recording. Man, another. This is gonna be pure chart geek heaven today because we have Justin Smyth. Am I pronouncing? It's Smith? It's not Smyth, right?
It's actually Smyth. Yeah,
It
actually
is?
Smyth. Yep.
Okay, so Justin Smyth, everybody probably knows him as the next big trade. So he has his website with his screeners and anything stage analysis. Justin, he sees that through those lens. So
Mhm.
he doesn't care, I think, if it's bananas or apples on the top left in the ticker box. It's just, is that stock going to give me great risk to reward? And of course, Kevin's with me. I'm super happy that Kevin gets to meet Justin because I've followed Justin since I don't know, man, 2012. I've been tracking him since I read the Stan Weinstein book, not Stan Weinstein, like I used to say. All right, that's my intro.
Stan just resurfaced too for anyone that's a fan of Stan. He just did an interview about a month or so ago. So that was actually a great interview. So I recommend anyone that's interested in stage analysis to go look that up on the internet as well.
Is there a link? I'm going to put in the description so folks can try to find that maybe.
I'll definitely send it to you, Patrick.
Okay.
I'm actually still planning on doing a write-up on my website about that interview as well. But yeah, you can definitely find it still on the internet.
Perfect.
So I was talking to Justin just before we started and explaining that I understand the sort of basic principles of stage analysis and the different stages that price charts go through, from a topping process to the drop down into a basing process and then the breakout. But and also how the moving averages are important. But really, I don't know a great deal. It's not perhaps not something that I sort of knowingly use a lot of the time, although I suppose actually I probably am using it without realizing it a lot of the time. So I'm going to pull up a couple of charts and just sort of run through the way I see it, and then maybe if Justin, you'd like to just explain it through the lens of stage analysis and how we can use those tools to analyze the things that I'm analyzing in a slightly different way. And it's, as always, it's about building up a base of evidence, isn't it? And getting that evidence to support what we're thinking. So, I mean, this is the one I've been following for a while. It's the Bitcoin price chart going back to 2011 or so. And the way I've analyzed it is that through a series of arcs. Anyone that follows me will be well aware that I sort of practice this sort of arc theory a lot of the time, and we can see that prices followed very nicely this sort of rising, falling process, and it's a cyclical process, of course. I guess it's another way of describing the cycles that are occurring with them. Excuse me, within Bitcoin, the 4-year cycles, roughly speaking. So, I mean, at the moment, clearly we've broken out here. We're up through the moving average, and price has been moving up since it broke out around about the 10,000 level or so, when I sort of posted about the breakout through an important resistance line. Of course, price has topped somewhere around the 65,000 mark and pulled back a lot since then, more than 50%. So I've identified this level, along with a lot of other technical analysts, that we're at now as being crucial, really. Bitcoin has to prove itself here for a number of reasons that I won't explain just at the moment, because that's all using my methodology. And I've kind of identified this as a crucial point where Bitcoin will either indicate it's likely to, or wanting to move much lower, and perhaps start this arc number 4. In other words, the arc number 4 is kind of over here somewhere. Or the bullish case, which is that arc number 4 is still ahead of us, and we haven't completed this particular cycle yet. So, what's your view on that, Justin?
Well, my view from a stage analysis perspective is Bitcoin was in a basing phase, obviously, and you can see it here on this chart. Like after the 2017 run, it went into a climactic top, and then had a major correction, and that formed the basing phase, which was like the stage 1 base. And actually,
so this period here is called stage 1 basing. So the period from this low point, is that right, up to along here somewhere?
It actually I don't know which period moving average. Do you have a 1 month moving average? Is that what that is, or is
Yeah,
that
this is sorry, this is a 12-month moving average, but I can change it to 30-day if that's what you'd like.
Yeah, actually, I would consider like when it broke down in 2017, it actually went into stage 4 briefly for maybe about a year into 2018. Then it's finally kind of put in that major bottom in late 2018, and then it's transitioned into more moving sideways, like above and below the moving average, which would go into like 2019 and then into mid 2020. So really, you've got the stage 2 climactic top in 2017, a brief stage 4 downtrend.
30-week, Kev.
30 weeks.
Sorry,
yeah,
because sorry, Justin. The biggest thing I've realized when we're comparing, let's say, stages, the time frame is critical, right? Because you could still be in a stage 2 uptrend on, let's say, the yearly chart, but you could have multiple stage 2, 3, 4, 1, 2, 3 cycles on the smaller time frames.
Exactly. I know time frame is critical, and time frame should match up with what your trading objectives is and like how you trade. So if I'm a position trader. I trade like on an intermediate time frame where I'm trying to catch weekly and even monthly moves in something. And so that's why I use the weekly charts. And that's kind of the time frame stage like the original stage analysis was meant for. I know some people try to use it on lower time frames as well. I don't really do that as much because I just stick to position trading for the most part. But I've seen that done before.
So this is the weekly chart now with
this looks great actually.
30-week the 30-week moving average marked on it. So that's
so you can see like the stage 2 top in late 2017, then it declines below a declining moving average into actually early 2019. So that's a stage 4. So then it kind of moves up again, but what all the moving average does is it like starts going sideways, right? And a lot of times people get when something breaks out above the moving average, like in early 2019, but the moving average is declining, that's actually not a good setup because you've got a lot of resistance you're going back into, and it really hasn't set up a stage 1 base yet. So that's why like this breakout in early 2019 didn't go anywhere, was because you've got this resistance and there's still not enough time in this consolidation to really set up the next breakout. So that's really what initially created the stage 1 base. Then you start moving sideways again for a while into early 2020. And then you can see, like, notice how the price action gets really tight in early 2020 and into mid 2020. This is the type of like volatility contraction that precedes breakouts typically. So this is a key thing to look for as well on your chart. And then you finally got the stage 2 breakout in, it was about like mid 2020, where you can see it kind of like, if you draw a horizontal resistance line around, like connecting those resistance points, like around 9,000 or something. I can't really tell on the chart here, but, it finally, actually that's a perfect line right there. It broke out initially, then it kind of pulled back a little bit, and then it breaks out again. And then it goes on this massive run that we just witnessed. And that's the stage 2 uptrend. And then what's happened recently is it broke down on huge volume in like March or April of this year, and has been consolidating below the moving average since then. So to me, it's kind of transitioning into stage 4, but it hasn't really like broken below the moving average like super significantly yet. But it is like on my chart, the moving average has kind of rolled over because I'm using the exponential moving average, but I would consider it in stage 4 right now. It has to like repair itself a little bit more to kind of move back into stage 3. But that's kind of how I view it now. So for me, it's a no touch on 2 different aspects, because it's in stage 4 and there's a lot of resistance now above the current price. So even if it was to like firm up here and consolidate, it's got a ton of resistance now, which I think makes it less likely that it would break out into an uptrend again at this point. It's probably going to take a lot of time to consolidate this if it is going to break out again.
Interesting. Yeah, I mean, I've been saying the similar sort of thing in a different way, really, is that not to get particularly excited until or unless it breaks above this horizontal resistance line around 41,000, and more especially above the moving averages. So yeah, it's a caution, I suppose.
Yeah, there's too much of resistance there, and you can see this across almost any coin right now. Like, it's not just Bitcoin; it's all these altcoins and Ethereum and everything else looks the same. So, if you were to see something really strengthen and kind of turn around quickly, that would lead me more to believe that it was. I mean, when you see everything acting the same way in a sector, that tells you that that's the way things are in that sector right now. And I think that, again, there's just really no reason to get involved with Bitcoin right now at this point. I think there's things that are set up a lot better than Bitcoin right now.
Well, that's the point, Justin. People, because once you're not able to look elsewhere, that means you're emotionally attached to it for some narrative, not because, let's say, Bitcoin's the next thing, evolution. If you keep wanting to see the bullish patterns, even if they're not there, something is broken, in your mindset, and it's a danger. It's dangerous, right? Because that was the rule. For the takeaway for me from Stan is rule number one: don't buy if it's below a declining 30-week moving average. That was like one of the first premise, and the inverse, right? Don't short if it's above an inclining 30-week moving average.
Yeah, it's a little bit of a mixed message with some of the coins. I mean, Stellar Lumens, for example, is still above that 30. Let me just check that. I've got the wrong moving average on there, haven't I? It should be weeks. Let's see how this fits. No, it's below the 30-week moving average. So same sort of thing, really, isn't it? It's
right.
In a similar position below the 30-week moving average, which is starting to flatten out.
See, the other thing about Bitcoin too is it went up like 6 times, I think, from the breakout. So I mean, it made a massive run. Like, there's the only people that were trying to squeeze more out of that run were people that got in late that wanted to get more out of it. And that's why it's so critical, if you're using stage analysis, like to like find these ideal buy points and to get in at the right time. And that's where you can ride the run. So people that got in early on Bitcoin in the fall of 2020, they had huge profit in that move because they got in early. It's these people that got in late, like in February, March 2021, where people started putting laser eyes on their Twitter feeds and stuff. That was where the move was already pretty much over. So they got in late, and then they got in around where it topped. And this happens over and over across all different kinds of markets, because people only get into things when they hear about it, and if they're not following markets and studying what's going on, they're missing the beginnings of these moves. So that's why, like I know people on Twitter were posting about the stage 2 breakout way back in August and July 2020. That's where you wanted to buy Bitcoin.
Yeah.
And the thing
you
is,
can see it here, can't you? Price moving through the 30-week moving average, then breaking out through the through a declining trend line there. So, that's I suppose kind of the ideal.
Yep, that's the ideal buy point. Exactly.
Yeah. But then up here, it's still very much open to debate. With the price just lingering a little bit below the 30-week moving average. So, it's.
I mean, it could move back into stage 3.
You could say something to play for in a way, couldn't you? I guess, but yeah.
I think it could move back into stage 3, but this thing could go sideways for months and months and months and just wear people out. Just like what silver's done in gold, like the last year, it could do the exact same thing to people.
So talking about gold.
Sure.
Got a gold chart here for you that goes back to the 1970s, and it's got all sorts of bits of information on there, but it's primarily looking at the US election cycle and the cyclical behavior. Points 1, 3, 5, 7, 9, and 11 and 13 are all 8-year cycle lows for gold, and they all tie in exactly with the US presidential elections. But that aside, clearly we've had a very large period of sort of effectively just going sideways, going nowhere through the 1980s and into the 1990s, and a huge base forming, which then took us all the way up to a couple of $1,000s, of course. And since then, since 2011, another period of basing. So, I mean, I kind of got excited when we had the breakout here through the moving average and through the declining trend line. But in terms of stage analysis, do you want to just explain what's going on there?
Oh yeah, for sure. So again, you can see the stages kind of evolving. If you're interested in stage analysis, definitely check out my site or just Google stage analysis. I mean, if you want to see the 4 stages, but yeah, like, so essentially what happened with gold was we had like the massive bull market in 2000. It started around 2001. Massive stage 2 uptrend, kind of topped out around 2011, went into stage 3, and then went into a stage 4 decline in 2013. That stage 4 decline bottomed out in early 2016, where we started forming a stage 1 base again, and then we broke out into stage 2 again in 2019. And you can see that again, like, you can draw that same horizontal line across the chart on the base there, where it breaks out in 2019, finally above the base. And then we've been in stage 2 since then, except for the fact that last year gold declined below the moving average, like into early 2021. But I think we're in stage 3 right now with gold, because it kind of went below the moving average for a little bit, but then it's been going sideways since then. So I think essentially what we're doing with gold right now is just setting up a base here, and I view gold as being in stage 3, so it's kind of in no man's land. But I'm kind of waiting for it to set up. Like, I think it's very possible that gold like just finishes off a base here and then breaks out again at some point. And we've been basing in gold for about a year now, so that is a way better position to be in than in something like Bitcoin that's just started its potential base. So we've been doing this for a year now with gold.
Okay. Yeah. So Kevin's a fast learner. He knows it's weekly and 30-week moving average.
Mm-hmm.
Yeah, I was quickly trying to readjust the settings on there to get it to where we need to be. But yeah, so the 30-week moving average, guys, that's just about exactly where we are at the moment, and price has been fluctuating either side of that. And
Yep.
Yeah, from that point of view, that's one thing to keep a close eye on from stage analysis.
And you can see the sentiment, I think, in gold and silver has kind of gone down because we haven't gone anywhere for a while. So I've kind of noticed that. And like, we had a pretty good stage 2 run for about 2 years, or maybe a little over a year, and from 2019. So I think it's pretty natural to see the market consolidate here for a while. And yeah, there's been some like positive signs. I think I've been tweeting about, like, Franco-Nevada is acting pretty well. Like, that's a stock that tends to act well when gold's like kind of firming up a little bit. So I've really been kind of noticing that as far as the mining stocks. Yeah, you can see, like, notice how like this last like pullback in gold, like Franco-Nevada just didn't really care at all that gold kind of pulled back pretty sharply in June. And you notice how like the price actions got kind of tight there on the very right hand side of this chart, like on the handle almost here. Like, that's a really good sign. It doesn't mean that gold's gonna blast off from here, but it means that gold might be getting later in its consolidation and potentially setting itself up again. So you kind of seeing something somewhat similar in like Royal Gold, and I think wheat and precious metals too is acting like okay, I guess, for silver. But that's something that I've been looking at.
Yeah, this
I mean,
beast
it
is
looks
so
like a bull flag, doesn't it?
well. What I've noticed, Justin, is since like I cycled, I tried a whole, I did the classical charting, the stage analysis, and all that. What I've realized is bullish constructs or bullish clues, they tend to overlap all these systems. That's why I never judge somebody who has a different type of trading system, or like the way they look at the charts, because at the end of the day, take a step back. Well, the stage 2 is what? It's a series of higher lows, right? And if you start doing lower highs and lower lows, then you're in a downtrend, you're in a stage 4. So the moving average is great because it kind of tells you, right? It's like a visual clue to see where you are. And all these classical chart patterns that Kevin draws, they're also derivatives of the price. So if like his lower trend line breaks, well, that means you're starting to head into a bearish territory. Then you might be doing a lower low.
Mm-hmm.
But Franco-Nevada is a weird beast because honestly, you put that on my radar, and even in like it's so weird. This chart, it's like it doesn't even belong in the gold complex center because it's such a odd chart there.
Well, actually, go back, look at 2018 too. Look at how it started firming up and got above the moving average. I think this happened like way before gold did, and when gold broke out in 2019. This stock just has a history of like firming up before gold tends to break out. I think the same, even you can go back into early 2016, and I think the same thing happened. I think first Franco got above the moving average a little bit before gold did. So it's just something I've noticed. It's probably because the company, maybe the streaming models is superior to maybe like the traditional mining model. I think a lot of people have talked about that, but it looks like it's reflected in the stock price. Yeah, what you're saying, Patrick, though, is like nothing works all the time with any technical method. You have to understand your technical method and then be honest enough to admit like it's going to work a certain percentage of times, but it's not always going to work. There's stage 2 breakouts that fail. You have to notice that in the chart, react to it, and then adjust what you're doing. I think stage analysis doesn't work all the time, but overall, I think it works in the long term, and it works enough times catching these big moves that it's a successful method. But nothing works. I mean, there's been plenty of stage 2 breakouts this year that have failed in different markets, so nothing's going to work every single time.
No, and the key is catching the beginning, just catching at the beginning. And the only way for a newbie to catch a stage at the beginning, it's not because somebody's mentioning it on Twitter. That could be too late unless he's following you, and then he knows that you're getting them early with your screeners, right? Because you need something that scans all these instruments. Because if you wait for Elon Musk to tweet about it, it's probably in its third continuation breakout, deep in the rally, deep in the cycle, deep in like super. That's another thing. You're the one who showed me that distance from the moving average thing. So Kevin, everything comes from Justin that, and maybe, I don't know.
I think, Patrick, what you said there is so spot on. You have to, if you're doing your homework and you're watching these things happen, you're going to be in early. The thing, though, that you have to understand is you have to be patient. Like gold and silver could easily be setting up a base here and breaking out sometime in the future, but you have to be patient and let it happen. You can't be, markets consolidate for years at a time, and so you can't just expect everything to work immediately just because you started looking at it.
What? I look at a chart, I see the profits before they happen. And that's the most dangerous thing, because then your brain every day's challenge. And if the price action goes down when your expectations are this high, then you're a disaster waiting to happen, because you're going to take an emotional decision. You're going to break the rules of your system. And
that's so spot on. You have to be patient. You have to be honest with the charts. The charts are going to tell you what's going on. You can't look at the charts and see what you want to see. You have to see what the chart is showing you. That is a key thing that you have to understand, I think.
When you use a distance from the moving average, do you use the same moving average that you used in the chart? So if it's 30 in the chart, do you use distance from the 30-week moving average?
Yes. Yep. Distance from the 30-week moving average is what I use.
What I'm trying to highlight there is a sort of zone where it's where the distance from moving average typically turns back down, and then a zone above that where it can become extended in a bull market. The problem here, of course, is that FNV doesn't go back particularly far. It goes back to 2012 on here. So the sort of evidence and the history is a little bit limited, but so far during this bullish run, we've achieved distance from moving average of around about 42% here. I'm assuming that's a percentage scale. I think it is. So it gives you an idea where you might get to in a good strong run, and where it may drop to on a pullback.
And is that a place like I've seen you say, okay, look, I'm stretched from the moving average. I'm gonna take some profits. Sometimes you tweet that out.
Mm-hmm.
How do you go like, I feel it's stretch, or you base it on its previous price action? Like, okay, look, every time it was 40, 50% stretch above, then, or do you have a fixed number? Like no matter what instrument it is, if it's 100% above its moving average, you will trim.
It's a combination of where it's been in the past. If there's like just like Kevin just did there, like looking at some previous evidence if it exists. Also, I look at market cap, and that seems to so the smaller a company is, sometimes the smaller companies can really get stretched like multiple hundreds of percent above the moving average. The larger companies, since there's more money in them and it takes more money to move them, they tend to not get stretched as much. So I kind of have soft rules that, like, if the market cap is like a small cap stock, those stocks can generally get 100 to 200% above the moving average. If it's a mid cap or large cap, it tends to be lower than that. So those are kind of general rules that I have, but there's no science behind it that makes things work every single time. So I think you just have to be able to acknowledge that it's historically stretched, and probably, like, if it is a couple 100% or 100% or more above the moving average, then in general it's stretched.
Yeah, I mean, so what we've got there in the chart there is just, I always try and sort of visualize things in some kind of colorful way, and it's really highlighting danger zones in this upper zone, and then as it pulls back, it's almost like a buy zone down here. We're way below the moving average. We're in a general uptrend, so this is a sort of, I suppose you could say, deeply oversold, in inverted commas, kind of buy zone. This pale green zone is a more typical buy zone, and then as you become more stretched, you're heading towards this sort of darker red danger area. So that's kind of how I'd interpret the distance from moving average on that particular chart, I think.
Stan would never have you buy below that zero line. Never. That's a
I
big
was going
no-no.
to say that I would, yes, never. That's the number one rule. You never buy anything below the moving average. Never.
Even in an established uptrend. No.
I don't buy dips, because I don't know if that's in a downtrend or if that's just a dip in a longer term uptrend. I don't.
Okay.
So that's just my rule. I mean, again, like what Patrick said, you can do it differently if you want, but I think the rules that exist for stage analysis will keep you out of trouble, because the problem is if somebody buys that dip and it is in a major downtrend, they can get crushed because it's going to keep going down.
Yeah.
So
So as far as stage analysis is concerned, you would probably have sold at this point, and then as we climb back up through the 30-week moving average, you'd be confident to sort of get back in at a slightly lower level than what you sold at. Is that how?
That is correct, but you also have to weigh, like, it's like the weight of the evidence. I think Patrick's pretty familiar with the weight of the evidence, where you need to look at all the stocks in the sector, like, especially with gold and silver, this sector tends to run together. So when you see like multiple gold stocks or silver stocks breaking out at the same time, that's where you want to be buying and taking those big positions, because the whole sector is working at the same time. If you see just Franco-Nevada working, that tells you that maybe the sector is getting stronger underneath the surface, but it's not quite ready to break out yet. So that's the way I interpret this right now. Is I think Franco-Nevada is probably giving you an early sign potentially, but it's not quite there yet.
But for a gold bull market, I'm assuming we sort of got the breakout back here in 2018 or thereabouts, late 2018. So we're pretty early in a gold bull market. Would you say it's still early stages?
I think gold is in stage 3 right now, and I think that it could easily break out into stage 2 again and resume this bull market, I guess, that started in 2019. So I think that's certainly a possibility. I'm just waiting to see if it happens or not. And I think that, you've got a base now that's a year long. So that's, whenever you get a base that's a year longer, like, that's a great position to buy breakouts from. So I think if these stocks firm up and break out again, it's going to be a good run again. So I'm watching this with like anticipation, but I'm just not doing much because it hasn't quite happened yet. So
just waiting for more evidence. Yeah,
exactly. Yeah. And I think, I mean, you even started to see it. Like I think like Hecla started breaking out a couple weeks ago, like in late May, and like the silver was starting to firm up there, and it just kind of broke down again, and I think it's just wearing people out more is what it's doing. To be honest, it's this sideways basing stuff is like bear markets. They either scare you out or they wear you out. So this one's wearing us out, I think.
Well, this one, to be honest, when this one does break out, I mean, look how far back it goes, 1968. So it's been 50 years in a contained within two trend lines for 50 years. So a breakout through here will be saying something pretty important, I would say, not just for the company, but perhaps more generally, because it's got a lot of history, this one, hasn't it?
Well, this one's been acting really well compared to a lot of the other ones too. I always look for the stocks that are showing a lot of relative strength when the market's bad, and this one is one of the best silver stocks, I think, looking right now.
Can you zoom in, Kev? Because I know for 30-week moving average, like more than 2 years of data, you kind of miss the.
Yeah, definitely. Yeah, zoom in on this one and look at where it's at in relation to the 30-week, and this will be a good example for anyone watching this too, like to understand how to see like something that's acting better versus something that's not. So like notice how this stock is still, I mean, it's just barely below it, but it's, I mean, the 30-week moving average is rising, and it's still kind of above the support level to some extent here, like around like 650 to like 6. So, I mean,
the 30-week moving average is 676 at the moment, and we're just 7
right
cents
there
off that. So, a weekly close will above 7 cents higher would be back on the rising moving average. So
yeah, and so look at this now, and look at like Pan American Silver. If you PAAS, like that's a stock that's not looking as good.
If I was going to say this is also a bullish descending wedge as well, so that's another reason to expect that to move up.
So hold on before you change, Kev.
Sorry, yeah.
I just let's say, because now hindsight's always a winner. If you put a draw a trend line on that candle that broke out in April, and you draw a horizontal trend line, a lot of people could have stage analysis guys. We would have bought. We would have called that probably a continuation breakout right here.
Exactly.
Even lower, Kev. Yeah, because that red candle is a gap up. So I would lower that line. There you go. So that, and we don't see the volume because the volume is also critical, but that is a classic breakout with a retest like 3 months later, which happens like, I don't know, it happens often.
Patrick, that's exactly right. And you have to understand that not every breakout works. Yeah. So you have to be able to cut your losses if the breakout doesn't work. And also like, maybe take some partial profits on this initial move, and because you need to look at your risk reward and what you're trying to do with your trading. But I think like this breakout probably failed because the market's not ready to really move yet. So that goes back to where we're just consolidating right now overall, and it just might need more time.
It's a big resistance area overhead. Some people are probably wondering why I've marked it as a broad red zone like that, and it's because there's no single line that you can draw on the chart that touches either the body or the top of every candle perfectly. I've tried, but because you go back in the price history here, some of these candles spike up quite a long way. So I tend to take all of that into account, because what we've got here is a force field. It's not a single line. It's not a line of bricks that's one sort of molecule thick. It's actually it's like a force field, a zone that's repelling. It's completely invisible. It doesn't exist anywhere except in inside algorithms and computers. So it's completely invisible, but price knows it's there, and so it's it's getting into that sort of zone of resistance, and sure enough, it's been sort of repelled back down. But time will come, assuming we're in an ongoing bull market, which I'm pretty sure we are for the next 8 years or so, whatever it turns out to be. Time will come that we will overcome this resistance zone, and that will be hugely important for the company, for Hecla. It will mean, well, technically, it'll mean huge gains ahead.
Just so let's say I would have bought on that breakout and now it's pulling back. When do I pull the plug? I remember like if I remember correctly, Stan, well, okay, the rule was if you have a weekly close below the 30-week average, you're out. But I was there a provision that even like on the breakout, you still put the sell stop below that line, right? Because you said sometimes it comes back a little bit below that breakout line. Like, am I misremembering?
I actually typically put mine at the breakout line, but I think I actually talked about this. I did another interview recently, and yes, you're correct though, Patrick. Stan put the sell stop below or at the bottom of the range, like where it consolidated before it broke out. So that gave the stock a little bit more room to kind of pull back if the market was a little bit weaker. So I think like between like 650 and like a little bit higher than that, like that's where you would have cut your losses because the breakout failed there. Exactly.
He had that round number thing. It's crazy. He said always put it below round number because humans, they put sell stops at round numbers because that's how they could think. I don't know if that still applies today, but he says if it's a $6, he says put it at 585 or 590 just not to get triggered.
Exactly, because the idea is like the algos would go after that price and try to clear the stops out, and then the market would move back up. So the idea is like get your stop below these round numbers where the algos might take you out, and so that you can stay in if that happens, I guess, is what the rationale is there.
So there's still some wiggle room here for this to survive, but not much.
Yeah. And it's one of the best acting silver stocks too. So I think this is one to keep on your radar if silver does firm up and break out again.
Okay. Did you want to have a quick look at Pan American? Yeah,
I mean, this will be a good example of showing. So look at this one. See how it's below a declining 30-week moving average now, and a little bit, and it's below like this consolidation. Like, so this stock, like say the silver market firms back up, this stock has to move back above this resistance now and then break out again. Whereas Hecla, all it has to do is move up above a little bit of resistance and break out again. So I would consider this one of the weaker silver stocks right now. I mean, I think there's stocks that are even worse than this, but looking at relative strength is really important because the best stocks tend to hold up the best during corrections.
And you use a Mansfield, right? I can't remember if you put that on your charts.
Yeah, I used the relation between the S&P 500 is what I use to see if like the relative strength.
Are you searching for the Mansfield, Kev?
Yeah, it's not on. I'll have to do a.
It's not in the built-ins, so yeah, you have to. Oh, there it is. There's one of that. Yeah.
There you go. Try
that one's. So now at the bottom you could punch in. The SPX, great. So the red zone, the red highlight, it's kind of hard to see here, but the red highlight is because you're underperforming the SPX, or you're below the zero line and below a declining 30-week moving average. Mm-hmm. And the green is the opposite. And I remember Stan used to say when you cross over the zero line from below to above, if all the other criterias were there, that was uber bullish.
Oh, yeah.
And we kind of see it in 2019.
See that there? Look at that. Whoa.
Oh, yeah. Look at that. The breakout in 2019 was just textbook. Look at how it's crossing above and it's ripping on volume. Like that's where I traded that. Like that was where I made most of my profits in 2019 was on that breakout.
Kevin, could you put the volume, please? Because volume is also critical in.
Oh, just you're talking about regular volume.
Just regular volume, yeah.
Yeah. Okay. I'll just.
So you played this one back in the days.
Oh yeah. If you go on my YouTube channel, I made a video right around when gold broke out in 2019. I wrote some articles too. If you go back to my website, nextbigtrade.com, you can see all this stuff too.
Oh yeah, look at that volume on that candle, Kevin. On that
look at that.
Candle.
That's just like wham, like
not there. On the left. Yeah, there too. But I was thinking more of a 2019.
Yeah, 2019. So, and you can see them here. The moving average was declining a little bit with Pan American because it was kind of one of the weaker ones. But if you look at like silver or like First Majestic, I think, was in a little bit better position than Pan American was here, but they all broke out on volume back then.
Well, it consolidated a few weeks below that 30-week moving average. It was practically flat when it broke out in 2019.
Yeah, true.
And
I'd rather see the moving average overall, though. Like even like this, like going back further, I'd rather see that more sideways than it is here. But yeah, you're right. And they were all doing the same thing. So I think that's where you got like the group confirmation was there in 2019.
So yeah, Pan America has some work to do. So
exactly.
Yeah, I would like definitely not buy Pan America here, and like the breakout, even in classical charting, that breakout is still that upper trend line. So even if you wouldn't look at the 30-week moving average, you still have that line that Kevin drew on top. That's the breakout line.
Exactly.
You got the moving average overhead, and then you've got that trend line there. So I wouldn't be turning bullish until it's back above that.
Yeah, and it's like that cost opportunity thing, and like it wears people out, right? And it just wears people out, because then after that you're looking at your friends in cryptos or somewhere else making millions, and then you're saying, I'm a loser. What am I doing in silver?
That is so true. And you know what's really funny about what you said there? That's exactly what's happened, where I think gold started moving down and sideways right when Bitcoin broke out in late 2020. And now the opposite's happening. Now Bitcoin is broken down and silver and gold are starting to firm up. So it's and I think even the same pattern happened in like 2019, where Bitcoin was consolidating, but gold broke out and silver. So they've been like flip-flopping for a couple of years now.
All right.
So sorry, go on, Patrick, go on.
No, well, I just want, before we wrap all this up, I want to know about the markets, Justin. What are we crashing? Is the markets in the stage 3 top?
So the S&P 500, I've been waiting for kind of a more significant pullback in this uptrend, but it just never happens. So I think we're just in a stage 2 uptrend, and I mean the sentiment's pretty low right now. I think like this can just continue. I would rather see like a correction before we go into like maybe a late year rally, but I think that until otherwise, we're just in an uptrend here. So I think that I wouldn't expect a crash anytime soon. We just had a crash in 2020, so I think like and actually if you look at the recent like you went sideways for kind of a while from 2016 to 17 to 18 had a bear market, 2020 had a big correction. So I think overall, like we really haven't been in a bull market a lot the last 3 years or so. You had a bear market in 2018 and you had a bear market in 2020. So I think, yeah.
Well, that's the beauty of stage analysis, is because it's one of the systems where forget your biases, forget classical charting. If you're above an inclining 30-week moving average, don't ask why, just hold.
Exactly.
Look at how well it respected that 30-week moving average, or even from, oh no, it's the end of the world, the Fed, the money printing, like all these narratives, all these clickbait stuff. Well, at the end of the day, you want to make money. So if I would be less critical of like monetary and fiat, I should have just held the SPX, a little leverage, and hold it like for years and have way more money.
Yeah.
Well, since 2016, I mean, all that's been happening is that the price has been pulling the moving average up. The moving average is just a delayed price line. So all that blue line is the price, but averaged out over the previous 30 weeks. So, exactly what you say, if you're starting off with a moving average down here at 2,000 and the moving average is now up here at over 4,000, then everything's absolutely fine. You can double your money in the space of 4 or 5 years, which for most people is pretty much all you want. Doubling your money in 4 or 5 years is more than you're going to get if you put it in a bank these days, isn't it? So, and as long as the price is above that moving average, then your moving average is going to carry on going up. The moving average isn't going to start coming down until price has spent some time, well, more than 30 weeks below it. So yeah, as an investor, keeping it really simple, stage analysis is fantastic because the rules are clear, and it's not complicated. There's nothing technically difficult about it. You don't have to start drawing lines on the chart and trying to figure out where's the resistance, where's the support. Well, get rid of your lines, forget about it. All you have to worry about is where's the price in relation to that moving average. If it's above it, and just sit back and enjoy the profits.
Check. Justin, choose a chart. We're going to test Kevin. I think from what he said, he's learned it. Let's throw in the ticker and let's see. And we're going to ask him, do we buy, sell, or hold?
Go on, name me a chart.
Kevin, that was a brilliant statement, by the way. I agree with everything you just said there. That was great.
Good. Go on then.
Usually pull up Chipotle. I'll show you like what a stage 2 continuation breakout looks like. If you pull up CMG. I'm watching that this week. Full disclosure, I just entered this stock too. So this is one of the better looking stocks right now to me. So you can see how it broke out after earnings yesterday, and it consolidated for about 6 months or so, like for most of this year before this breakout. So you can see like the defined like resistance line if you draw it on the chart. And then this week it broke out on huge volume. You can see the volume bar down there too. So where it was consolidating sideways for a while and then, just ripped higher on volume after earnings. So this would be an example of a stock breaking out, a stage 2 continuation breakout. Now we don't know if this is going to work or not, but this is like the setup really that I'm looking for.
But the week's not closed, so the volume I see at the bottom. The volume I remember Stan is he wanted double the volume of the previous 4 to 5 weeks. So Kevin, you see that little volume there? It is, but the week's not even closed, right? Yet
the week's not even closed, but it's only Wednesday, and I think we're almost at, we're getting close to 2 times average volume, and it's only midday Wednesday, I think. So chances are it's probably going to be 2 times average for the week. I think by the end of the week, I would think.
Well, the average appears to be somewhere around about that level there, doesn't it? So yeah, you can imagine. Help if I move it along so you can see it. Mm-hmm. So yeah, if that's the average, somewhere around that line there, it's not going to take much to double the height of that volume bar. So yeah, should just about meet the criteria by the looks of it.
So let's say you're in now, you just wait, and every week, what do? You look at the chart, see where it's at, and then you move on to something else.
You keep an eye on it, yeah. So I mean, and look at the volume in the next couple of weeks too. Like if the volume follows up and continues to be high the next couple of weeks, that gives me more confidence that this trade is going to work. If you see like a one-time volume spike on the breakout and then it kind of moves back down, or if it sells off on huge volume, that tells you that this thing is probably a fake breakout and is just going to fail. So I think you just have to keep kind of watching it and. I mean, no stage 2 breakout is there's no way to tell if it's going to work or not, but enough of these work in a good market that you can make money off of trades like this. And so, we'll just see what happens with this thing. And this is what I would be looking for. And if you're looking at precious metals too, like if silver keeps consolidating, going sideways and sets up a breakout like this again, like that's where you would want to get in again is on a breakout. Or on the pullback to the breakout level, like you're showing here, like that's another place you can buy and then set up a good risk reward and see if it continues to move higher after that.
Yeah, I'm just visualizing the moving average here coming up through. If I get rid of I just get rid of the arrowhead so it doesn't look confusing, and I make it the same color as the line there. So you can envisage the moving average coming up something like that, I suppose, and a natural place for the price to come back for a retest would be a sort of focal point where the moving average comes through the what was resistance, now support. So something like that might be, it's just me sort of imagining what might happen. It'd be a fairly typical technical pattern to form.
Just on the left, Kevin, it did that. So that continuation breakout in late 2020.
Oh, there.
Now on the left.
Over here somewhere.
No. So that you were right there. So that breakout on the left, yes. So it broke out. Somebody could have bought there.
And I see what you're saying. Yeah.
3 months later, it came to retest that 30-week range, but that comes back to what Justin said. It wasn't quite ready yet. See, the market still needed, it went even, was it even bigger consolidation that it was required, right? So it was so weak that it dipped a little bit below 30-week.
And look at the volume on that breakout too. If you look at the bar, it's not as big as the current bar. So like the buying pressure definitely wasn't as significant then as it is now. So these are all factors to look at. Like this broke out with no resistance, so that's good. That's a good sign. But the volume wasn't great there, and that could have contributed to why it didn't work as well. But the volume looks really good on this one so far. But the market right now is still not acting great though. Like the S&P 500 is still kind of acting crazy. There's been a lot of pullbacks lately, so it's 2020 was a great market for stocks, and even gold and silver, like, it had a lot of good moves. This year has been kind of just a mess. So, and Bitcoin had a big run and then pulled back, and Bitcoin's been a disaster ever since that happened. So really, a lot of the profits were in the crypto stuff earlier in the year, and then that's been a disaster since then.
Jesus, man, we didn't test Kevin, but I think he grasped the gist of it for sure.
Yeah, I think what Kevin said was awesome. I was fully on board with that.
He's a fast learner, but again, it's like, because he's looking for bullish details, and stage analysis is just a visual way. Even for rookies, like, people look at all the crazy stuff I do. I said, just go buy the Stan Weinstein book. Start with that. Just go read that, and you'll have everything you have to get started. And it even takes years. I read it 4 or 5 times. Every time I reread that book, every year or every 2 years, there's new tidbits. That's what he meant. That's because it takes years of experience, man. You can't cheat that stuff there.
Exactly right. And I can tell that you know it well, because the way you've talked about a lot of different points, like you've certainly read the book multiple times. I think that really helps. I would, whatever trading system that you land on, study it and get better at it. That'll help you so immensely with what you're doing.
And I think my tip would be, whatever trading system you land on, don't shut your mind to other methods and techniques as well, because the more you can expand your toolbox, and the more evidence you can gather and the more evidence you can pull in, the stronger that builds your case. It's like a computer model trying to predict the future, trying to predict a weather forecast for next week. If you've got more computers, more models working, you're more likely to get a reliable prediction of what's going to happen next week. And it's the same here. It's, whether you're weather forecasting or forecasting the price of gold or the price of bananas or whatever it happens to be, the more evidence you can gather, then the stronger your case and the more confident you can be.
Cool.
Definitely.
Well, guys, go visit Justin, Next Big Trade, or at Next Big Trade on Twitter. Follow him, and hopefully we'll get you back on our show and talk charts, man. I know everybody always positive comments when you come, Justin, like on my podcast, and people really appreciate stage analysis. We have to make it popular again.
Yeah, definitely. This was a great conversation, I think. So I would definitely love to come back on, and it was great to meet Kevin too. So let's do it again sometime in the future for sure.
Fantastic. Really look forward to that, Justin.
For sure.
Ciao. Bye, Justin. Bye, Kev.
Thanks, everyone. Cheers.
Thanks, guys.
Bye-bye.